Hello and welcome to my channel Wonders of Price Action. This is the chart of Euro Australian dollar. This is a bit complex chart, and this analysis that I have worked very hard for, and I will try my best to make it quite simple for you. Now what we see here, that this pair was going upward from here, broke this level, and from here came down to retest this level. Once kept retesting this level and went up ultimately. Now this time it has developed a bearish scenario, but how do we believe that it is a bearish scenario? Because from this level it has already gone up and broke up. Now let us see. Now this was the high of the market, then came market for the low here, went back to retest this shoulder. This is the head of, and then broke this level to the downward. Still it looks like that this is a strong support. It looks like so, because it was a resistance here, then ultimately broke it, retested it once, twice, thrice, then went up, broke this level, came down, then this resistance again worked and has sent this pair to down this level again. Though it looks like a strong support, but the scenario that is developing, I have tried my best to understand it and to make it clear for you. Now, what is expected? The problem that is being talked about in the Australia is inflation. That is above 7 point something, 7 plus. Their target is 2 to 3. But the problem is that the same problem of inflation the Eurozone is also facing, and Eurozone has more inflation than Australian economy. But there is another problem that is Australian economy facing now. That is the problem of shortage of labor. And second, that what other economies have inflation, but their target is also very important for themselves, their economies. Due to the shortage, the businesses are not working well, especially the housing market is suffering from, has the problem of the shortage of the workers. In these conditions, now it is high probability that the Reserve Bank of Australia on the 7th February, that is coming, and they will have to decide the interest rate decision. They will have to give, and that is on the Tuesday 7th February. It is high probability that if they will increase the rate to track the money out of the market. The interest rate, it is called, there are two kind of operations that central banks do. One is absorption of the money, second is money supplying operations. When a bank does the money supplying operation, that currency falls, that depreciates, and when any central bank absorbs the money from the market, then that currency appreciates. Now it is high probability that on the 7th February, on the day of the interest rate decision, the this pair will go down. Now until there is a week or so, 5 days of the coming week from tomorrow, and the next 2 days of the market of the next week. So this is high probability that this will go for the retest. Now where is the retest expected? Let us find out in the 4-hour market. This is the same level. This is high probability that pair will go to retest somewhere here or here. Then on the day of the decision, it is high probability the rate will be increased, and that increase will be sufficient for sending this pair downward. Now let me set the short position from I think somewhere it will go back to this level. I expect this, and the stop loss I don't think we have to set the tightest up too deep, but it is enough above this wick also, because if this is broken, then this condition of the setup will be cancelled. So entry somewhere here, even if someone want to enter here, these are all the entry positions. And for take profits, there are many, because there are many take profit options. It is first take profit can be taken here. Now let me put the horizontal line, and also here is the take profit option, here is the take profit option, and here is also a take profit option. Here there are a bunch of take profits, but stop loss, if this is broken, this shoulder will be broken, then this setup will be cancelled. So this is the entry point, and it is better to enter in this trade before the news. Let us see what happens. But before, either before or half an hour after the news, not during the news. This I want to explain this, because before the news, if this level target is achieved, the pair goes back to these levels, then it is high probability that it is the good decision to take the sell entry. And if the pair is not gone up to that level, then we will have to see the 15-minute markets of the first after news. The first half an hour, there is the good entry time for this sell. Now one thing that I want to explain here, what are the money supplying operations and money absorb operations. Now this pair has, I was monitoring, I was analyzing this pair in the 2021. This pair was coming downward here somewhere. In the February of 2021, this is the November, okay. First time in the February of 21, and then July of the 21. Let us see the July. This is the 22. Okay, somewhere here, the Bank of Australia, or Reserve Bank of Australia, has uh, increased the purchases of assets from 2 billion per week to 4 billion, and then this pair went up to this level and then came downward. That was not the reason of the central bank, but the reason that was the fundamental reason. That was the reason that the coal of the Australia, that was on the shore of the ocean near China, and China was it was the time when there were not good relations between China and Australia, and China has banned many has put ban on many imports, and one of them was coal, and there was coal lying at the beach of the shore of the Chinese ocean. But when the problem of the power rose there, and their factories were shut down, they took that coal and paid, and due to that export, the pair came down and Australian dollar appreciated. But in the February, they have in their 2021 monetary policy, they have told that they will close this $4 billion asset purchases in the February. So this was the February, I think, yes, this is exactly February 2022. How after that was the money supplying operation of $4 billion. That was closed in the February 2022. As per week they were supplying, they were in the economy $4 billion. But as they closed that money supplying operation, how that Australian dollar appreciated, how fast, how quick that came down. So now, if they are increasing the interest rate is not money supplying operation. Here, the money that was being supplied, that was closed, but here they are not money supplying. Now they are not doing any money supplying operations, but if they raise the interest rate, raising of the interest rate is absorption of the money. They will absorb the money because they don't need to keep supplying, keep that money in the market, because the businesses are not doing well. So it is high probability that this scenario is expected on the 7th February. So subscribe my channel, like this video, and thanks for watching. Bye for now. I'll be coming in the next video with another analysis. Bye.